Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about economic data, how that impacts the markets with some market analysis, and then we'll talk about some option strategies we could implement into a portfolio based on those assumptions we come up with in our market analysis. All right, so without further ado, let's get on with the economic data. Only thing we really have going on today, well, it's pretty good economic data, or pretty robust economic data, something we really should be looking at, and that's durable goods orders, because you guys have heard me talking about the PMI numbers, the manufacturing numbers. Those are the forward-looking ones we've been trying to see what's going to happen with the manufacturing sector. Are we going to see a slowdown? Now, we really haven't seen that, folks, and it's showing up again here in durable goods orders. Remember, we're going to be stripping out anything transportation items related. Durable goods orders are orders of products that are going to last longer than 3 years, basically. So a refrigerator, things that are going to go into your house, a car would be showing up in durable goods, stereos, things like that. Electronics for the most part. But when you strip out those cars coming in at 0.7%, expected to be 0.4%, when you add those cars back in, it's still 0.7, expected to be 0.1. So better than expected on both fronts. Bit of a surprise here for my eyes and probably most people out there. The next thing we're going to be getting is pending home sales and crude oil inventories, throwing that off. Usually we get crude oil inventories on a Wednesday. We will get that again on Wednesday. I'm not sure why that got moved there. Right offhand, at least this early in the morning on a Monday. So keep your eyes out for that. We also got Richmond Fed coming out later on this week. Several Fed governors, advanced GDP. So it is going to be a pretty busy week for economic data. And then Thursday comes in, we've got personal spending, personal consumption, Chicago PMI. So this week is going to be a busy week for economic data, folks. It could push this market in either direction. Today feels like it's going to be a very strong day off the open here, especially with the economic data. This durable goods orders, I think there's nobody out there that really was ready for that number to come out as strong as it was. So I think that we're going to get a little bit of a relief here. Is it enough to break this bearish pattern here that we're seeing? Well, we're going to have to take a look here. Let's take a look at the markets and see what's going on here. We've got crude oil, or sorry, this is actually wheat. One of the things I wanted to talk about here, we're talking about higher prices across the board. Commodity prices really aren't as high as what we would like to, or what we're hearing in the news. So we saw wheat there, or wheat right here. We can see it's been coming off for several days. We've got corn. We can take a look at beans as well. Corn's about one of the few ones that is actually holding up quite strong here, and beans coming off quite a bit as of recently. So we're hearing a lot of talk about these commodity prices going through the roof. Well, some of the ones that were growing here are the ones that are actually coming off a little bit due to the strength in the dollar and due to the fact that they are not as bad off as what we were expecting. You know, we were thinking this winter wheat thing was going to be really bad with Europe. Well, we're seeing a lot of these commodities aren't as bad as what was expected. We're supposed to get a bunch of rain here in the Midwest the next couple of days. I think that is going to be something that caused these commodity prices to come off as well. When we were in Chicago, we used to say if it was raining on LaSalle Street, it was going to start causing these markets to roll over. So we're going to keep our eyes on that. We're getting rain across the Midwest. That could be a little bit bearish for some of these commodity prices here. Going over to crude oil is the one I was looking for. Crude oil, we can see, is making a bit of a rebound here. Crude oil inventory is coming out twice this week. I think that we're going to see some weakness here in crude oil as it needs to really come off, folks. We're going to have to see this administration really turn their heels on this type of rising inflation, because this is driving prices higher everywhere. Now, we were also talking about these commodities and gold, silver last week. Why aren't they getting any upside move here? Folks must be parking their money in cash. I also went on to say it looks like a lot of these institutional companies are putting money to cash. We've talked about 80% of their holdings were in cash for the most part on average across the board. I think that they're waiting in the wings to allocate this money. Are they going to do it right now? I don't think so, folks. I think this is going to be another one of those bit of a fake outs here as the markets are going to celebrate this durable goods numbers. We've had some decent manufacturing numbers, but folks, I'm just not really seeing the strength at the consumer level going out there. All I'm hearing is folks are pulling out on buying some of those other products that they would normally buy as a tie-in sale, if you will. So to go to Starbucks or getting coffee, you might get a sandwich. Well, some of those sandwiches, those little extra things that we would buy normally, are being held back. We're not buying the quantities that we were buying before this whole thing started here. So yeah, pullback in consumer spending is definitely a coming back from folks are spending too much money in gas and not able to buy those ancillary things. We're going to see it show up with restaurants. Folks aren't buying that second drink. So the ticket sale for each individual instance, if you will, is going to be a lot lower now because they're not buying those, maybe getting an appetizer or that second drink or dessert, right? When they go to Starbucks, they're not getting the extra sandwich or anything like that. So those little ancillary things will add up and slow down on the economy there. With that said, Bitcoin, the cryptocurrencies, folks are not parking money there. So that does not bode well during this time to see that as a flight to safety, if you will. VIX coming off, not surprising. Why? Because we've got a couple of days of rally. We've talked about this resistance level lining up with the 50-day simple moving average quite nicely at this point. Is it going to be able to hold that? I think it will hold. I think that the bottom is not necessarily in. Things that we're going to be looking to do here at Pro Trader Strategies with this rally is to look to do covered calls. We've got high volatility. We've gotten a bit of a spike here for these first few times. I've talked about it time and time again. It's time to layer on some covered calls and things that we have, stocks that we own. All right. So lower that overall cost basis going forward. Dow Jones Industrial Average, all of the charts in the equities look the same, folks. I can flip through one. You couldn't even see what the symbol was, and they would be confusing as to which underlying we're looking at. And here we have the E-mini S&Ps. You can see if we break it down into the overnight inventory, very long coming into today, very few opportunities to try and get out or to flush these folks out. So today is a bit of a mixed bag. Yeah, I think we'll see a little bit more upside here, but the strength I think is going to really start wearing on folks here as they're going to be talking about, well, that's the here and now. We've got, we do have Halloween coming up, which is a more of a holiday than it used to be, especially for buying here in the United States. So I don't think that that's going to be enough to really hold these markets up, as folks are going to be excited about a spending spree going into Halloween. As a matter of fact, that's going to be another one of those places where people are going to hold back on spending, likely is Halloween. Yeah, it's one of those fun holidays, but it's not going to be one of those ones where people make it definitely, or most people will definitely make that a point to go out there and overspend on something like that. So I don't think we're going to see a big spending spree here for Halloween. So I think we'll see some strength here based on the economic data, but the overarching feeling I have to believe is still to the downside. So yeah, we've gotten a little bit of a rally here, but we have not broken this pattern. All right. That's all I got for you folks. Hope you had a great weekend and ready for this week ahead, because it could be very busy. If you can't take that, take it easy.